Which of the following is not a required legal element of a valid insurance contract? A. Intention to create legal relations. B. Consideration. C. Misrepresentation. D. Offer and acceptance. The correct answer is C. Misrepresentation explanation. A valid insurance contract must include offer and acceptance consideration, usually the premium capacity to contract and the intention to create legal relations. Misrepresentation is not a required element, but a potential issue that can make a contract voidable. When does an insurance contract typically become legally binding? A. When the insured pays the first premium. B. When the insurer issues a cover note. C. When the policy wording is signed. D. When the proposal is submitted. The correct answer is B. When the insurer issues a cover note explanation. A contract becomes legally binding when there is offer and acceptance. In insurance, a cover note or written confirmation from the insurer signifies acceptance even if the full policy is issued later. What is the legal effect of a breach of warranty in an insurance policy? A. The insurer must pay the claim in full. B. The policy becomes void from the start. C. The claim may be denied depending on materiality. D. The insurer must refund all premiums. The correct answer is B. The policy becomes void from the start. Explanation. In insurance law, a warranty is a promise that certain facts are true or conditions will be met. If the warranty is breached, the insurer can void the policy ab initio from the beginning, regardless of whether the breach is connected to the claim. Under the Fair Trading Act 1986, which of the following is prohibited in the context of insurance? A. Offering premium discounts. B. Making misleading or deceptive statements. C. Delaying claims processing. D. Referring clients to other brokers. The correct answer is B. Making misleading or deceptive statements. Explanation. The Fair Trading Act 1986 prohibits misleading or deceptive conduct in trade. This includes false advertising or misrepresenting insurance product features. Brokers must ensure their communications are honest and accurate. In which scenario can the Consumer Guarantees Act 1993 apply to an insurance situation? A. When a policyholder receives bad investment returns. B. When a personal consumer policy is misleadingly sold. C. When business interruption coverage is underwritten incorrectly. D. When a client disputes coverage for a motor vehicle claim. The correct answer is B. When a personal consumer policy is misleadingly sold. Explanation. The Consumer Guarantees Act 1993 generally does not apply to insurance services, but in limited cases, such as the sale of personal policies to individuals, misleading sales practices may fall under this act. What is the primary function of the Insurance and Financial Services Ombudsman Scheme? If so, A. To regulate insurance companies. B. To issue fines to non-compliant brokers. C. To resolve disputes between consumers and insurers. D. To draft legislation on financial services. The correct answer is C. To resolve disputes between consumers and insurers. Explanation. The IFSO scheme provides a free independent dispute resolution service for consumers with unresolved complaints against insurers and brokers. It promotes fairness and transparency in financial services. Under the Privacy Act 2020, brokers must obtain client consent before A. Recommending any insurance product. B. Collecting or sharing personal health information. C. Offering policy renewals. D. Cancelling a policy. The correct answer is B. Collecting or sharing personal health information. Explanation. The Privacy Act 2020 requires that individuals' personal and health data be collected, stored, and disclosed only with their consent. Brokers must handle this information lawfully and ethically. A broker breaches their fiduciary duty if they A. Offer a range of quotes from different insurers. B. Act in the client's best interest. C. Recommend product that benefits the broker over the client. D. Explain the risks of recommended policy. The correct answer is C. Recommend a product that benefits the broker over the client. Explanation. A fiduciary duty means putting the client's interests ahead of one's own. Recommending product for personal gain rather than for the client's best interest is breach of that duty. What does scope of advice refer to in the broker-client relationship? A. The number of clients broker can serve. B. The time frame of the advice given. C. The areas or topics the broker is authorized to advise on. D. The commission received from each policy. The correct answer is C. The areas or topics the broker is authorized to advise on. Explanation. The scope of advice outlines what the broker is legally and professionally authorized to advise the client on. It must be clearly defined and agreed upon in the terms of engagement. Delegation in the broker-client relationship must be handled carefully to ensure A. Clients remain unaware of internal processes. B. The delegated party does not communicate with the client. C. The person delegated acts within authority and duties. D. The original broker avoids liability. The correct answer is C. The person delegated acts within authority and duties. Explanation. When brokers delegate tasks, they must ensure the delegated party is competent and operates within agreed boundaries. The broker retains responsibility for ensuring proper advice and service is delivered. What common law principle requires both the insurer and the insured to disclose all material facts related to the insurance contract? A. Proximate cause. B. Indemnity. C. Utmost good faith. D. Insurable interest. The correct answer is C. Utmost good faith. Explanation. The principle of utmost good faith, uberimi fide, requires both parties to an insurance contract to disclose all material facts honestly. This underpins insurance contracts and ensures trust and fairness. What is the purpose of the Insurance Law Reform Act 1977 in New Zealand? A. To establish prudential requirements for insurance companies. B. To regulate the use of insurance brokers. C. To limit unfair terms in insurance contracts and protect consumers. D. To define the legal definition of financial advice. The correct answer is C. To limit unfair terms in insurance contracts and protect consumers. Explanation. The Insurance Law Reform Act 1977 addresses unfair clauses in insurance contracts, including conditions related to disclosure and time limits. It aims to balance insurer and policyholder rights. Which organisation is primarily responsible for regulating conduct in New Zealand's financial markets, including insurance brokers? A. Inland Revenue Department. B. Reserve Bank of New Zealand RBNZ. C. Financial Markets Authority FMA. D. Ministry of Business, Innovation and Employment EMBA. The correct answer is C. Financial Markets Authority FMA. Explanation. The FMA regulates conduct across financial services, including insurance brokers and advisors. It ensures compliance with the Financial Markets Conduct Act and relevant licensing requirements. Which of the following is a key function of the Reserve Bank of New Zealand RBNZ in relation to insurance? A. Enforcing conduct regulations for financial advisors. B. Acting as the sole licensing body for financial brokers. C. Managing the deposit insurance scheme. D. Acting as the prudential regulator for insurers. The correct answer is D. Acting as the prudential regulator for insurers. Explanation. Under the Insurance Prudential Supervision Act 2010, the OpenZ oversees the solvency and risk management practices of insurers to protect policyholders and financial stability. Which of the following is a requirement for becoming a financial advice provider? FAP. Under the EFSLA. A. Holding a physical office in Wellington. B. Registration with the Reserve Bank. C. Holding a financial advice license issued by the FMAD. Certification by the Insurance and Financial Services Ombudsman. The correct answer is C. Holding a financial advice license issued by the FMA. Explanation. To operate as a financial advice provider, FAP, a person or entity must be licensed by the FMA, comply with the EFSLA, and meet conduct, disclosure, and competence standards. Which legislation redefined the framework for delivering financial advice in New Zealand? A. Insurance Law Reform Act 1985. B. Financial Markets Conduct Act 2013. C. Financial Services Legislation Amendment Act EFSLA 2019. D. Consumer Guarantees Act 1993. The correct answer is C. Financial Services Legislation Amendment Act EFSLA 2019. Explanation. The EFSLA 2019 amended earlier laws to create a single licensing regime for financial advice providers (FAPs) and to ensure consistent conduct, disclosure, and client care standards across the industry. What must a broker do when they identify a potential conflict of interest in dealing with a client? A. Avoid discussing the conflict unless the client asks about it. B. Disclose the conflict clearly and in writing before providing advice. C. Proceed with the transaction as long as the client is satisfied. D. Wait until the policy is issued to disclose the conflict. The correct answer is B. Disclose the conflict clearly and in writing before providing advice. Explanation. Brokers must disclose any actual or potential conflicts of interest as early as practicable and before giving financial advice or making a recommendation. This obligation is embedded in the Financial Markets Conduct Act 2013 and ensures the client's trust is maintained by allowing them to make informed decisions. Which of the following best illustrates a broker putting the client's interests first? A. Steering clients to the provider with the fastest processing time. B. Offering product that is best suited to the client's specific needs. C. Recommending the product that pays the highest commission. D. Disclosing the policy wording after the client signs. The correct answer is B. Offering a product that is best suited to the client's specific needs. Explanation. Acting in the client's best interest means the product or advice must align with the client's goals, risk tolerance, and financial needs, not the broker's incentives. This is foundational principle of ethical insurance advice under the Code of Conduct for Financial Advice Services. What is the primary purpose of the AML Act 2009 for insurance brokers? A. To detect and deter money laundering and financing of terrorism. B. To enforce taxation compliance among brokers. C. To reduce workplace fraud. D. To improve client satisfaction with financial services. The correct answer is A. To detect and deter money laundering and financing of terrorism. Explanation. The Anti-Money Laundering and Countering Financing of Terrorism Act 2009 (AMLFT) requires brokers to verify clients' identities, monitor transactions, and report suspicious activity to prevent criminal misuse of financial services. When must a broker disclose details of their commission or remuneration to a client? A. Before or at the time financial advice is provided. B. At the end of the policy period. C. After the insurance is purchased. D. Only when asked by the client. The correct answer is A. Before or at the time financial advice is provided. Explanation. Transparency about commissions and fees is required by the Financial Services Legislation Amendment Act 2019, ensuring clients are aware of any potential influences on the advice given. What is one key purpose of internal compliance systems within a brokerage firm? A. To promote internal staff promotions. B. To assist in client relationship marketing. C. To allow for easier policy sales. D. To ensure that legal and regulatory obligations are consistently met. The correct answer is D. To ensure that legal and regulatory obligations are consistently met. Explanation. Robust compliance frameworks help ensure adherence to laws like the Financial Markets Conduct Act and support audits, client protection, and organizational integrity. If a client makes a complaint about an insurance broker, what must the broker do first? A. Refer the client to a government agency. B. Address the complaint through the internal complaints process. C. Ignore the complaint unless it's in writing. D. Immediately escalate the issue to the IFSO. The correct answer is B. Address the complaint through the internal complaints process. Explanation. Brokers are required to provide an internal complaints process as the first line of dispute resolution. Only if that fails should the client be referred to external services like IFSO or FDR. What is one of the possible consequences for a broker who breaches financial services legislation? A. Delay in renewing their policy book. B. Disciplinary action, fines, or loss of license. C. Mandatory vacation from advisory duties. D. Client loyalty discounts are revoked. The correct answer is B. Disciplinary action, fines, or loss of license. Explanation. The Financial Markets Authority (FMA) can impose sanctions for breaches, including public warnings, deregistration, or legal penalties. Maintaining compliance protects both the broker and the public. The Financial Dispute Resolution Service (FDR) and IFSO scheme are examples of what? A. Approved dispute resolution schemes for financial services. B. Internal compliance departments. C. Government investigation units. D. Insurance marketing companies. The correct answer is A. Approved dispute resolution schemes for financial services. Explanation. FDR and IFSO are external, independent organizations that resolve complaints when a client is unsatisfied with the internal complaints process. All financial service providers must belong to one of these schemes. What is a broker expected to do when faced with an ethical dilemma involving a client's disclosure? A. Choose the option that protects the brokerage income. B. Apply an ethical decision-making framework to evaluate the situation. C. Avoid making decision until the issue goes away. D. Tell the client to do whatever they think is best. The correct answer is B. Apply an ethical decision-making framework to evaluate the situation. Explanation. Professional brokers are expected to resolve ethical dilemmas by weighing outcomes through structured reasoning. E. G. Fairness, transparency, lawfulness. This supports responsible conduct and protects the client. Which of the following is a key responsibility of brokers under professional standards? A. Selling only high premium policies. B. Maintaining competence through ongoing training. C. Competing aggressively for clients. D. Ensuring product loyalty. The correct answer is B. Maintaining competence through ongoing training. Explanation. Continuous education ensures that brokers stay current with regulatory changes, product updates, and ethical practices. The Code of Professional Conduct mandates ongoing development as a core duty. Under the Code of Professional Conduct, what does the client first duty mean? A. The advisor must prioritize their commission structure. B. The client must always accept the advisor's recommendation. C. The advisor must always act in the client's best interests, even above their own. D. The client must verify the advice before proceeding. The correct answer is C. The advisor must always act in the client's best interests, even above their own. Explanation. The client first duty requires advisors to prioritize the client's interests, avoiding conflicts of interest and ensuring transparency and fairness. It is a central principle in the Code of Conduct. Which of the following is an example of a conflict of interest that must be managed under the Code of Professional Conduct? A. Advising a family member on basic insurance terms. B. Referring a client to a licensed provider. C. Recommending a product that pays the advisor a higher commission. D. Informing a client of risks involved in a policy. The correct answer is C. Recommending a product that pays the advisor a higher commission. Explanation. A conflict of interest occurs when personal benefits, e.g., commissions, could influence advice. Advisors must disclose and manage such conflicts to comply with ethical obligations. What does the principle of indemnity in insurance law mean? A. The insured is entitled to receive more than their loss. B. The insurer profits from each claim. C. The insured is restored to their financial position before the loss, no more, no less. D. The insurer must always pay out the full sum insured. The correct answer is C. The insured is restored to their financial position before the loss, no more, no less. Explanation. The principle of indemnity ensures that the insured cannot profit from a claim. It restores the policyholder to the financial position they were in prior to the insured event. Under the Code of Professional Conduct, why is record keeping important for financial advisors? A. It ensures the advisor can reuse documents for other clients. B. It helps limit liability in case of complaints. C. It documents the advice process and ensures accountability. D. It satisfies clients' curiosity about past decisions. The correct answer is C. It documents the advice process and ensures accountability. Explanation. Good record keeping allows clear tracking of client instructions, advice given, and compliance with obligations. Crucial for audits, reviews, and dispute resolution.